Hi guys, we're back. So let's continue with our exercise. So the next one we will be doing is cash sales according to the cash register roll, 45,472 inclusive of VAT. And then they just say the CRR total includes the sale of the kitchen cupboards, materials only, waka waka waka. So let's draw our P accounts. Okay, so cash sales. Cash sales already talks about bank, which is your assets plus minus. Am I right? Okay, so what did we do? Cash sales. So this will be your sales, your equity minus plus, and then VAT. So once again, what happened? It's sales, so money came in, so that'll be VAT output, which is a liability, minus plus. Alright, that you should be able to do now. When I wake you up in the middle of the night, you should be able to do that. Okay, so let's just start this quickly. Alright, so cash sales, so that will mean our bank increased with, what's the amount? 45472. 45472, which is your VAT inclusive amount. So your sales increased because it's an income. Remember, your income is always a credit. So that'll be 45472 divided by 1.14, which gives you an amount of 39887.72. And then obviously that money we came in, SARS wants their cut, so that'll be that amount minus that amount, and that'll give you 5584.28. Alright, so let's quickly put that into our journal. So our bank increased, so that'll go into our cash book receipts. So let's quickly do that. No, where's my cash book receipts? Oh, here we go. Okay, so first of all, it's your cash register roll. So your document number will be your CRR. The date is the 5th. Details is cash sales. Analysis of receipts is 45472. VAT output is 5584.28, and then obviously this is sales, so that'll be nearly wrote it in the wrong column, 39887.72. but this is not where it ends. Remember what we said previously. Whenever there's a sale, you need to remember all the transactions that happen to that specific transaction, everything that happens to it. Now, once again, yeah, we made a sale. We sold certain items. It was the sale of kitchen cupboards. So there is a cost price that also has to be written off the book. So in other words, now we need to add 2 more accounts. Obviously, just like we've done it previously. So the one will be your trading inventory, which is your assets plus minus, and then your cost of sales, which is your equity minus plus. But so now we need to go and calculate, first of all, what our cost price on this specific item is. Okay, so for that, now once again, now we go back to the magic block. So we've got our cost price, our profit, and our selling price. Now remember what we said with the magic block. The magic block, okay, cost price, yeah, so we've got here, and remember it's on cost, 50% on cost, so that'll be your markup percentage. Now luckily we've already calculated what the VAT exclusive amount, the VAT exclusive selling price is. Am I right? Because we need to calculate the cost price. So the VAT exclusive selling price will be, okay, wait. So let's put first, don't forget this, I nearly forgot it, it's 100. Our markup is on cost, our profit will be 50. So then the selling price will be 150. Oh, cannot forget that, that's very important. So now we can put in our VAT exclusive selling price, which will be 39887.72. So now we just do our magic block. Where's my calculator? So that'll be 39887.72. I hope everybody can remember how to use the magic block. You divide it by the column next to it and multiply it by the one you want. So it's 3, so you divide it by 150, you multiply it by 100. That'll be 26. Yeah, I am right. Just wanted to check. And remember, you always divide by the column that's completed fully. Alright, so that'll be 26591.81. So your trading inventory now decreases with 26591.81, right? 2659, and your cost of sales, which is your expense, 26591 on the debit side, 0.81, 26591. Okay, and now you need to pull that into your journals, and that is what the cost of sale and trading inventory column is. Remember, in your textbook, it only says cost of sales. It only says cost of sales. But for yourself, when you do your exam, just write in trading inventory, because otherwise, believe me, you're going to forget about the other leg that goes with that. Where we can see it's trading inventory and cost of sales, just write it in. So when you transfer that to your general ledger, then you will remember about the trading inventory and the cost of sales. Okay, so we just fill that amount in here, which will be 26591.81. Am I right? I better be right. Okay, yeah, 26591.81. Okay, so we have completed that one. Okay, so always remember, when you do a sale, it's always your bank, your sales, or your debtors and sales. But don't forget about your trading inventory that has left the store, and the cost that has to be written out of your books to get to your profit. Alright. Okay. So now let's see now. Number 8. Or well, date 8. Let me just wipe it down again. Okay. So yeah. You know, one thing I realized, since I started doing this, is it's very difficult to talk in front of a camera. It's much easier to talk in front of people. So that's why I get so tongue-tied sometimes. So sorry about that. Okay, then number 6. Alright, where's my pen? Here we go. Okay. Let me just do my 3. Okay, so now, this is it just says debit the equipment account, debit VAT input, and credit bank for a check purchase from future computing. Okay, so let's do what it says. It says, okay, bank, equipment, and VAT input. So bank, equipment, okay, bank is an asset plus minus, equipment is an asset plus minus, and they say VAT input is an asset plus minus. Oh wow. Alright. So first it says debit the equipment account with 7719.25. Okay, so we're debiting that. Then it says debit the VAT input with 1080.70. Okay, so 1080.70. And credit bank 8799.95. Is it 95? Yes, it is 95. Alright. So now that basically told us what to do. Just do what to debit, what to credit, but now we need to go see, okay, so if we debit or credit the bank account, it goes into cash for payment, so we obviously purchased this equipment. Okay, so let's do it quickly. Let's go to our cash for payments. Okay, that'll be document number 3. The date will be the 8th. Name of payee, who did we buy? It was from Future Computing. Now the VAT inclusive amount in bank is 8799.95. VAT input is 1080.7. And then equipment, there is no account for equipment, so that'll go into your sundries. And that'll be, what's the amount? Yeah, 7719.25. Okay, the account number is B8, and that'll be equipment. Okay, so now we've done that one, that one. Okay, and we've done that one. Excellent. Let's carry on. It's a lot of work, man. Believe me, I know. I was always also a student at some point in my life, and this is really a lot of work to get through, a lot of stuff to remember. But the best thing, like I always tell students, well, my students, I used to be a lecturer while I was still living in South Africa, and one thing I always tell them is practice, practice, practice. That's it. All you can do is practice and ask questions. That's the best advice I can give anybody. If you haven't got a lecturer, well, that's when you email me. Then I'll try and help you. But if you have a lecturer, ask as many questions as you possibly can to ensure that you understand it. That's very, very important. Alright, so let's quickly look at the next one. Okay, purchase cold drinks for 42.34 and 2 paper reams totaling 48.6 from petty cash. Okay, exclusive of VAT. Okay, so the 480.6 is exclusive of VAT. The cold drinks are, why do they have to put it like that? Anyway, let's just do it. Okay, so we purchased cold drinks for 42 Waka Waka. So I'm actually going to do this in 2 different parts, if you don't mind. Okay, wait. Before I confuse everybody, let's do the first one. Let's do the first one first. Alright, where's my pen? Let's have a look. Okay, I've got my wrong pen. Okay, so let's go. So first of all, let's look at the first one. Purchase cold drinks for 42.34 inclusive of VAT from petty cash. So we've got petty cash, asset plus minus, and then we purchased cold drinks, so that will be considered staff refreshments. The staff is lucky. I wish I could. I wish my boss did that. Staff refreshments is an expense, so it's equity minus plus. And should there have been VAT, money went out, so it's VAT input, which will be an asset plus minus. But now let's look. So the petty cash decreases with 42.34, and our staff refreshments would be debited as well. But now remember what we said earlier about the VAT categories. Any entertainment, now staff refreshments, when your boss buys you something like a cool drink, he cannot claim VAT back on that, because that is considered entertainment expenditure. And as we saw when we looked at the VAT categories, that you cannot claim VAT on that. Okay, so in other words, staff refreshments will then be 42.34. Okay, the full amount he cannot claim back on that entertainment expenditure. Okay, so let's put that in quickly first. So that is the first one. So okay, where was I now? So we are going to our petty cash journal. Petty cash journal, it is PV2. That's the number, it just carries on. 8. What did we buy? We bought cold drinks. Then petty cash is 42.34. Staff refreshments 42.34. Okay, but now that doesn't stop there. It continues and say you bought 2 paper reams totaling 48.60 exclusive of VAT. Oh, yippee-ki-yay. So let's do this one again, or the other side of it. If you really want, you can put it all into one line, but I know sometimes people do get confused with it, so it's not a sin to put it in 2 different lines if that works better for you. So let's quickly do this one then. Once again, the other leg will be petty cash. Petty cash. And what did we buy? Stationery. It's paper reams, so stationery. Assets plus minus, stationery, equity minus plus. And then because it's for work, we can claim VAT, so money went out, so it's VAT input, which is an asset, plus minus, all that stuff you need to know. Okay, so what does it tell me? It says we bought 2 paper reams totaling 48.6 exclusive of VAT. Now we always know the main account is inclusive of VAT, am I right? So in other words, the stationery account will then be debited with 48.60. But now we need to calculate what the VAT inclusive amount is. Am I right? So to do that, okay, so to do that, you just say 48.60 times 1.14. You multiply by 1.14, and that will give you your VAT inclusive amount of 55.40. So your exclusive amount times 1.14 gives you your inclusive amount. So to get to your VAT amount, VAT input is always a debit. You say 55.40 minus 48.60, and that gives you R6.80. Sorry, we're not in. I might live in New Zealand, but this is all South African based. So it's not dollars, it's rand. Okay. So in other words, petty cash 55.40, stationery 48.60, and 6.80. So now let's just fill it in. Okay, this is still PV2. The 8, what did we buy? Stationery or paper reams. And then we just complete it as it. So it's 55.40. Postage and stationery will be 48.60. That's right. And then the VAT will be 6.80. Okay, let me just mark what I've done now. Okay, there we go. So, that was a bit of a tricky one, but if you battle and you get stuff like that, just read your question carefully, and if you have to split it, just split it. And then 4860 exclusive, and always read, is it inclusive or exclusive? Do you have to calculate the VAT? You can also use the magic block for VAT calculations, if that will help you to calculate your VAT inclusive or your VAT exclusive amount. Okay, so let's carry on. So so we've done that one now. Okay, now we've got cashed a check to pay the storekeeper's wages of the week. Cashed a check. Okay, so let's see. Cashed a check, so that's bank. Asset plus minus. What did we buy? What did we pay for? Wages. Equity minus plus. Now obviously if you pay wages you cannot claim VAT back on that, so in other words there will be no VAT. Okay, so the cash check store wages, your bank decreased with 500 Rand, and then your wages are debited with 500. So when your bank decreased, that will go into cash book payments. So let's go into cash book payments. So that'll be 04. The date is the 9th. Okay, it was a cash check. How much? 500. And then there is no other account there for wages, so we put it in the sundries. So that'll be 500. Wages is number in 6. And the account details are wages. Okay. On the 11th, cash sales according to cash register roll. So let's do that one quickly. Okay, cash sales according to cash register roll. Now remember, this was cash sales, so you will have to calculate your cost of sales and the trading inventory that left the business and all that stuff. So let's just draw the other two accounts as well. Let's just do the first one first, and then we'll move on to the second one. Alright, it's inclusive of that, cash sales according to cash register roll. Alright, so that'll be bank. Assets plus minus, sales is equity minus plus, and then VAT, let's see, money came in, so that will be VAT output, liability minus plus. Am I right? I better be right. Yeah, I am right. Great, so let's have a look at that. So it's 7695, your bank increased with 7695. Your sales, remember, that's your VAT inclusive amount. So now you have to take off the VAT to get to your sales. So it's 7695 divided by 1.14. So your sales gets credited because it's an income of 6750. So 7695 minus 6750 will give you your VAT output amount of 945. Okay, so that's the easy part. Let's quickly put that into our journal. So the bank increased, so cash book receipts. So once again, it's your cash register roll. The 11th was cash sales. Analysis of receipts was 7695. VAT output 945. And then your sales 6750. But that is not where we are stopping. Remember, we still have to take the trading inventory out of stock, and we have to take the cost out so that we can get to our profit. So this will be your trading inventory and your cost of sales. Trading inventory is an asset, Cost of sales equity. So, but now once again, now we need to calculate the cost price. So here we go again. We've got your cost price, profit, selling price. And it's on cost, so we work with a markup percentage. So cost price 100 plus 50, 150. Now your VAT exclusive selling price is 6,750. Paper, got so many papers here. 6,750, so it will be 6,750 divided by 150, multiplied by 100, and that will give you 4,500. So now then your cost of sales and trading inventory column, you put 4,500. Okay, easy enough. Okay, sorry. I need to mark all this, otherwise I'm going to get confused. Alright, let's carry on. Okay, on the 12th, you purchased a delivery vehicle non-passenger. So remember what I said. If it's a non-passenger vehicle, it means that you are allowed to claim VAT back on it. So purchase a delivery vehicle by check from Elite Motors for 80,000 Rand. So let's first wipe the board. And remember, all of this, drawing the T accounts, this is all just for practice. When you do an exam, you're not going to have time to draw T accounts, so you will just need to know what goes into which journal. So, but this is just for practice, and it's very good to do it that way. Alright, so let's do it. Bank. And the other leg, what are we buying? I think we're buying fuel, if I'm not mistaken. We're buying a vehicle. Sorry, the next one is fuel. I'm already in the future. Plus minus, and then we are allowed VAT. So money went out, so it's VAT input, which is also an asset plus minus. So your VAT decreased, your bank decreased with 80,000. Now your vehicle, obviously VAT exclusive amount will be 80 divided by 1.14 gives you 70, because remember your bank decreased, your vehicle, you gained a vehicle, so it increased. So that will be 70175.44, and then the VAT amount will be 80,000 minus that amount, giving you 9824.56. Alright, so let's just put that into our books now. I know this takes very, very long, but yeah, necessary. Cash book payments. So it's 05. Date is the 12th. Who did we buy it from? Elite Motors. Okay, amount of 80,000 in your bank. The VAT amount 9824.56. And then we bought a vehicle. Well, there's no account for vehicles, so that goes into your sundries. Of 7017544, maybe 10, and account is vehicles. Okay. And that one we've done. Okay. Now, paid for diesel. Paid for diesel for the delivery vehicle from petty cash. Alright, let's see. So So let's draw our team accounts again. Oh, petty cash. Petty cash is the asset plus minus. We bought fuel, which is an expense, so it's an equity minus plus. And then obviously, as we saw when we looked at VAT categories, fuel are, you cannot claim VAT for fuel, so we don't need to worry about that. And that's 320. 320 because it's an expense. Okay. So let's go here, PV3. What's the date? Where's my petty cash? There we go. 12. We bought diesel fuel. So petty cash decreased with 320. And there's no accounts there at the top for fuel, so that'll go into our sundry accounts. 320. I just want to check it's in 3 and fuel. Okay, so that one's done. That one's done, and that one's done. Now again, cash sales according to cash register roll 12825. Where's that? There we go. Once again, it's cash sales, so you need to remember all that other stuff that we keep talking about. So all those millions of accounts. So it's bank, sales, VAT. So money came in, so it's VAT output, liability minus plus. And we'll take care of those two. Oh, we might as well write it in. It's your trading inventory, assets plus minus, and your cost of sales, which is equity minus plus. Great. So let's have a look. So first of all, our bank increased with 12825. And your sales is an income. It's an income. Income always a credit. So that'll be, let me just check. So it's 12825 divided by 1.14, which is 11250. And then that output is that one minus that one gives you 1575. So let's quickly put that in the books. So, bank increased cash book receipts. So that'll be a CRR again for your cash register roll. 17, that's cash sales. 12825 in your analysis of receipts. VAT output 1575. And sales 11250. But as we know, we have to calculate the cost of sales, so let's go back to our magic block. So it's cost price, profit, selling price. Okay, that'll be your markup percentage. That's 100, 50, 150. We have the VAT exclusive selling price, and that's 11250. So 11250 divided by 150 multiplied by 100, and that gives you 7500. So now that'll be your cost of sales. Great. Now, okay, services rendered for 5,000 Rand exclusive of VAT. Issued a cash invoice to R. Rogers in this account. Alright, let's do it. Remember, services rendered, we did not sell any stock, so you don't have to worry about cost, price and stuff. Okay. Oh, this is taking long, so sorry about that. Alright, so let's see. So it's bank, it's an asset plus minus. So what did we do? We rendered a service, so that'll be services rendered. And it's an equity minus plus because it's an income. And then VAT, money came in, so it's VAT output, liability minus plus. Alright, so let's see what can we do here. So they say it's 5,000 Rand exclusive of VAT. So they gave us that amount, the services rendered amount, because that's VAT exclusive. Remember, your main account is always the VAT inclusive amount. So now you take 5,000 times 1.14. That gives you 5,700. So your bank increased with 5,700. And then your VAT amount will be 5,700 minus 5,000, which is 700. So let's quickly put that in our books. So the bank increase, so that'll be your cash book receipts. That is CB2, 17, services rendered. $5,700 in your analysis of receipt. We're going to be doing the bank part later, so don't worry about that. Your VAT amount is 700. Services rendered 5,000. And because we didn't sell any stock, it doesn't influence your cost of sales or your trading inventory. Okay, sorry, I just want to mark this. Okay. Well, we are getting there. We are getting there, people. I know this is a very long exercise, so I'm sorry about that, but I would like to go through everything that maybe there's something you're battling with, and maybe you can understand it better this way. Alright, great stuff, great stuff. Let's carry on. I'm going to check on my time. Oh, by the look of it, I might have to do this exercise in threes, not just two. In 3 sessions, not 2 sessions. Okay. Purchase a cell phone for business use, pay as you go from petty cash. Inclusive of that? Okay, perfect. So let's do this one quickly. So we have our petty cash, which is an asset plus minus. What did we buy? We bought a cell phone. Okay. Pay as you go, so that falls under, it all depends on the business, but I see in the textbook this falls under equipment, not under telephone. So it's obviously a phone is equipment, so they want it under equipment, so we will do it that way. It's an asset plus minus, and then VAT, yeah, cash went out, so it's VAT input. That's an asset plus minus. Okay, so let's have a look there. Purchase a cell phone, 584.95. Petty cash, 584.95. Now 584.95, equipment, so 584.95 divided by 1.14 gives you 513.11. Your VAT amount will be that one minus that one. It's a VAT input, so that's a debit of 71.84. So that will go into our petty cash journal. That is PV4. On the 18th, what did we buy? We bought a cell phone. Then the petty cash is 584.95. VAT amount is 71.84, and then equipment, yeah, there's no, in the petty cash it's only postage, staff, refreshments and VAT, so equipment will fall under sundry. That'll be 51311. That'll be B9 is equipment, and your account equipment. Right. Okay, so we've done that one now. Okay. Alright, here we go again. 20. Purchase trading goods by check from Orbison dealers, 11,482.61, and you paid for delivery cost for the goods from petty cash 176.23 inclusive of VAT. So there are two transactions that happened for that one purchase, so let's quickly have a look at that. We paid by check, so that'll be bank. Asset plus minus, it'll be trading inventory. It's an asset plus minus, and then it's VAT. Money went out, so it's VAT input. Asset plus and minus. So let's just first do the first part before we look at the second part. Great. So your bank says you purchased trading inventory, so your bank decreased 1148.61. Sorry, 1148.61. Okay, so trading inventory is your VAT exclusive amount. So that'll be your trading inventory increased, so it's 10072.46, and then your VAT input, always a debit, is 1410.15. By now you should know how to calculate it, so I'm just going to write it down to save time. Okay, so let's just put that in our book. Our bank credited, so that's cash book. Payments. So that'll be document number is number 6. Date is the 20th. Name of payee, who did we pay? It's Oberson dealer. And it's 11482.61. The VAT amount 1410.15. And then trading inventory 1072.46. So we just fill that in right over there. Okay, so we've done the first part, but now paid for delivery costs. So now we paid for the delivery cost out of petty cash. Okay, so we paid for the delivery cost out of petty cash. But now we did pay for the delivery cost, but that delivery costs are linked to the trading inventory. So in other words, that money must be combined with the trading, with the price on the trading inventory. So when they sell this trading inventory, it will the price will actually be how can I explain it? The price might be a bit increased because of the delivery cost. So in other words, this is not going to be read in as delivery costs, but this will be read in on trading inventory, because it has to get added to the trading inventory, because it's a part, it's basically part of it. Sorry, my English is completely failing me today. So the delivery cost for the trading inventory has to be added to trading inventory. So when the when the selling price is calculated, that would be taken into consideration. So it is delivery costs, yes, but it is for trading inventory and it has to be added. So in other words, it's not delivery costs, it's trading inventory. So it gets added to that price. Okay, so money went out, so it's VAT input. Sorry that I'm getting so tongue-tied. It's sometimes difficult to explain stuff if you can't think of the words. Alright, so let's just have a look at that. So delivery cost, okay, 176.23. 176.23. So now obviously your trading inventory is going to get debited with the VAT exclusive amount 154.59, and then your VAT input will be 21.64. So now you just fill that in to the books. Where's my pen? There we go. So that'll be PB5, I think. Yeah. So that'll be PB5, 20th. That's delivery costs. Petty cash 176.23. VAT 21.64. And then trading inventory will fall under the sundry accounts of 15459.59. So trading inventory is in your details column, and that will be B6. Okay. So that's done. That's done. Great. Okay, just marking everything, sorry about that. Okay. Excuse me. All this talking makes you thirsty. Okay. Like I said before, it's not so easy talking in front of a camera, it's much easier talking in front of people. Well, for me. Okay, so let's see. Issue a cash check in favor of Germiston Primary School for the enrollment fees of the owner's son. Ooh, okay. Tackle that one quickly. Okay. Where was I? So first of all, bank, asset plus minus, and then obviously now school, the owner's school fees has got nothing to do with the business. So that's money that the owner is taking for himself. So that is called drawings. So equity minus plus, and obviously he cannot claim that back for his son's school fees. So the bank decreases with 1,000. Drawings always a debit, 1,000. Okay, so let's carry on. So bank decreases, that'll be cash for payments. Oh, now I have to go down again. So it's 07/21, date 21. It's for Germiston Primary, 1,000 rand in the bank column, and in the sundry it's 1,000, and drawings is the account under details, and the folio is B2. Okay, did I get all of them? Looks like it. Great stuff. Okay, next one. Thomas Poole, the cleaner, his wages from petty cash.
Now that one we should be able to do with our eyes closed already. Petty cash, asset plus minus, wages, equity, minus plus. Our petty cash decreases. How much do they pay this guy? Only 100 rand. Oh my goodness, the cheapskate boss, sorry. Pay the guy more. Wages is an expense, 100. So let's complete it in the petty cash journal. That'll be PV6. The date is the 22nd. It was for wages. Petty cash 100. And obviously we can't claim VAT on that. So details 100. Sundry accounts. Wages is M6. The folio. And the account is wages. Great stuff. Okay, let me just mark it that we've done all that. Okay, number on the 24th. All right. Alright, let's just see what we did. On the 24th, the owner took 200 Rand from petty cash. 143 of this amount was used to purchase snacks for the staff function, and the owner kept the change for personal use. Alright, so now we have to do a little bit of maths. So first of all, we've got petty cash, which is an asset plus minus. So what did he do? He bought staff refreshments. That's an expense, so it's equity minus plus. And then what else did he do? He kept the rest for himself, so that would be drawings. Equity minus plus. Alright, so first of all, let's take a look. So you took 200 Rand, so your petty cash decreases with 200 Rand. The staff refreshments, now remember we cannot claim VAT back from that because it's entertainment, is 143.50. It's an expense. And then the drawings will be the rest, which will be 200 minus 143.50, which is 56.50. And now we just complete that in the books. Okay, so PV7, the date is the 24th. Now what did we do with it? So this will be staff refreshments and drawings. Petty cash 200, staff refreshments 143.50, and then lastly drawings will be 56.50. Now obviously that will go under sundry accounts. That's B2 for drawings, and the account is drawings. And there. Okay, and I think I'm going to do the last one for now, and then I will have to do the third load. Well, the third part of this exercise is taking a bit longer than what I thought it would. Sorry about that. Okay, so send a parcel to client D Knox via courier and paid with petty cash 91.20. Okay, let's do this quickly. So it's again petty cash, asset plus minus, postage and stationery is an expense, equity minus plus. and then VAT input because money went out. So an asset plus minus. Alright, so petty cash decrease with 9120. 9120 divided by 1.14 is 80, and then 1120 will be your VAT. Oh, here's one. Okay, so let's quickly complete this one. It's PV8, number 27. This was for parcel or courier, whatever you want to call it. Let's just say parcel to D Knox. So it's 9120. In the petty cash, postage and stationery, it's 80, and then VAT input 1120. Okay, so let's just mark that one, and mark that one, and then there. Alright, sorry I couldn't finish this exercise, but I will finish it in part 3. Alright, thank you guys.